What's going on, guys? I hope you're having a great weekend so far. I wanted to do this video quick because I thought it was a really interesting topic to talk about. If you watched my video last weekend, it was over my portfolio review, and I went over basically some of my options positions. And one of those positions was a SOFI call option. So that call option was actually at the strike of 1750, and what we've seen all week is SOFI just blow up past that strike. So it's just gone all the way up and all the way up and all the way up to actually almost around 1950, 1938 for the close on Friday. And really what I want to go over is I'm running the wheel on SOFI, and I'll go over the wheel strategy in a future video. But for now, I want to go over basically how I've managed this trade throughout the week. So this is obviously a winning trade, right? I sold, I'll show you here in a minute, but I sold above my original put price, and with that I was going to make a little bit of money, but I'm going to show you how basically I maximized the amount of money that I was going to make off this trade, and how I plan to keep doing that into the future. So let's jump over here real quick, and basically what I've laid out here is how I've ran the wheel so far. So back in July, I actually sold a put at the $17 strike, and I collected $28.34. And when I go over the wheel strategy, I'll get a little bit more in depth because I haven't sat on this stock for 3 months and not done anything. I've sold mini calls, but for the purpose of this video, I just wanted to lay out the one I sold this week. So this week, last week, I sold a call at the 1750 strike with a date of expiration of 10/15, and I was able to collect $35.34. So with that, that's all money that basically I collected from the premium of selling these strikes. So I had a couple options of how I could look at this trade. I could take it for what it was and basically let the stock expire, and it would have clearly expired around $200 in the money. Because like I said, I was at the 1750, so by the end of the day, Monday, we were actually already $100 past my strike price, and throughout the week we even blew up $100 more past my strike price. So I could do that. I could let it expire, or could have let it expire last Friday, and I would have collected the $28.34 from selling the put, $35 from selling the call, and then $50 in stock appreciation, which is just the difference between $17.50 and $17. So in total, that would have given me $113 in return at 68 cents, and then an ROI of 6.69, so 6%, 6.69%. So what I decided early in the week, after kind of getting blown out of the money, is to look at rolling the trade. So I made a couple trades here. Basically what I did is I bought back my original call. So here, buy at the strike of 1750 for the expiration date of 10/15, which was Friday, and I bought it for a premium of $144.66. So then with that, what I wanted to do is basically, instead of taking this loss, I wanted to hedge that loss, and I sold a call at 1850 for a date of November 5th, and I was able to collect $141.34. So right there you can see I did incur a small loss of around $3, $3 to $4 in there. But the way I look at it is this $35 in premium, that easily covers that $4 loss there. And what I gained from it is fairly significant. So what you see here is the result of doing that trade. So again, I collect the $28.34 from selling the original put. I collect the $35.34 from selling this call for this week, and then I had to buy that call back, which resulted in a $144 loss. But then I sold a new call for further out in the money and further up in strike price, and I was able to collect $141.34. So basically, like I said, incurred a small loss there, but that's really covered by these two premiums. And what I gained from it is $100 in appreciation. So originally I had $50 in appreciation. Now I was able to collect $100 in appreciation. And just by doing that, I was able to collect basically an additional $50 or so and get a total of $160 around in this trade, which resulted in an ROI of 9.43%. So that's almost, excuse me, a 50% return over what I originally had. So 3% more than this 6.5% I was able to collect on the trade. And the way I'm calculating these ROIs is just the amount I was able to collect divided by $1,700, which is the amount of premium I originally had to put up when selling this cash secured put. So really what you have to look at when you're doing this strategy is just make sure that you're mitigating your loss here, right? So when you buy back your put, or sorry, your call, you want to make sure you're buying or you're selling a call for about the same amount of money, or at least enough to cover where you're still covered on your original call. So I could have sold this probably one strike higher and even collected sold it at the $19 mark, and basically that additional lower premium here would have been mitigated by this $35. So that's another option. What I'll look at doing in the future, I want to let time expire and hopefully this option, the time value of it decreases. And what I can do is, if the stock levels out and we kind of stay around this mark, like it kind of appears to doing for the next 3 weeks, then what I can do is even roll my call even further. So I could roll from the 1850 up to maybe 1950 and hopefully even collect a little more premium and expand my appreciation, which would just, again, keep building the ROI and keep building up how much money I'm collecting. So this is really just a great way of kind of capitalizing on a winning trade, right? People always talk about let your winners run, and this is exactly what you want to do in the wheel strategy. If you get blown past, just keep rolling it as long as you believe the stock is going to keep going up. Obviously, you don't want it to spike up for a day and then roll your call and have to basically incur this loss and additional sell, and then be stuck with it dropping back down below your strike, and then basically kind of defeating the purpose of all this. Obviously that wouldn't be the end of the world, you'd still be all right, but the biggest thing is just keep letting winners run and keep capitalizing on that appreciation that you can gain. So if you like this video, I appreciate you dropping a like down below. If you have any questions about what we're looking at and how I'm doing this, just drop a comment down below and I'll be sure to answer them. Like I said, I'll post a video hopefully later this week of how I run the wheel and kind of how I manage a lot of these trades, and I'll actually go in depth on this and hopefully break out a little bit more of how much I've actually made on this trade, because there are a significant number of trades in between these two dates where I sold calls and was able to capitalize on a lot of premium. So again, I appreciate you watching. I hope you have a great weekend, and I will catch you next time.